Hi there, Serial Trader here. Let's have a look at the end of the week here for the major US indices. Starting off with the chart here on SPX. Alright, so this week had some nice bearish follow through after that sell signal on Monday. And just on this chart, you can see we're well below the daily T line now and continuing to close well below it. And that's something that we haven't been able to do basically since this uptrend got going here from the end of December. So that's a noticeable change just in that short-term, trend following moving average. And we got a nice, bearish MACD cross activated here on the daily chart. You can see RSI is coming off that overbought condition, falling quite nicely. So quite a nice phase change there from that just relentless crawl higher we were in. And okay, so if we go in a little closer on the shorter term time frame, say the hourly chart, it looks like something pretty impulsive is unfolding here. So far this looks nice and sharp. It doesn't look corrective at this stage of the game. And if I were just to throw some shorter term labels on it, maybe we have our initial one down, we have a wave 2 in place, we're working our wave 3, may have ended today, and we may be coming up already wave 4, and then a fifth wave down. That's kind of the rough roadmap I have here short term, although certainly subject to change. But given the current price data, something along these lines. And at some point we would then expect a corrective bounce up, right, for a larger 2 or B, depending whether this is going to be a 5 down for 1 or A, or a 3 up for B or 2. Again, we don't know how it all fits together just yet until there's more information, but certainly short-term basis, nice impulsive move to the downside that doesn't really appear complete here, although can't rule out at least a fourth wave bounce, if not something a little more substantial. Okay, now just coming out to the daily again here. I'll get rid of those labels just to kind of show you where I'm thinking there short term. So if we are in this more bearish scenario where we're we did our wave 1 down, we did our expanded flat wave 2 in this case, and this is the very bearish interpretation, which certainly could be the case. We need to have a 1 down, and then we'd have to have a wave 2 up, and these are all just approximations until we have more market data. Then I need to have a nice strong wave 3 of 3 down, ideally taking out the lows just on that wave 3, taking out the December lows, maybe come back up in a wave 4, so maybe test that long-term trend line from 2009, and then down again in wave 5 to complete that larger 3. That's kind of a rough roadmap, and then we'd be coming up in a larger 4 and down again in a larger 5 still. Now that's getting way too far ahead of ourselves, but just kind of a theoretical roadmap here if this is the correct wave count, and certainly time will tell. And just to look at the other wave count, we're going to go to this other chart, which is the second most viable wave count that I've got on the go here. And if this is the case, then we could just be working our initial A wave down of a larger 2 if we have a new bull wave starting here off the bottom. So after we have our A wave down, we have to have a B wave up, then a C wave down in just kind of an idealized zigzag wave 2, coming to the Fibonacci retracement zone here, maybe the 50% or the 618. Certainly nothing out of the question there. Even if this is the overall bullish scenario, it can certainly still come down significantly further than it has thus far. We've only been going down this week, so to correct something that lasted, even if it is just a correction and not a new impulse wave down starting, to correct something that lasted over 2 months, it's going to take a proportional amount of time. It may not take 2 months, but it's not going to be 1 week. It's not going to be even 2 or 3 weeks. Most likely, it's going to be something, in the 1 to 2 month range, in all likelihood, even in this scenario. So keep that in mind. We have to correct not only price but also time. So this decline I mean, I'll point out another thing too here in the hourly chart. So we did get some shorter term oversold conditions here, like hourly RSI got well below 30 and bounced off that area a few times, and you can see we've had some sort of a oversold bounce reaction from those levels, but that's not very unexpected. It certainly fits well with the overall decline. I mean, it's not going to be straight down. There will be bounces along the way, sometimes more significant bounces. But the trend is clearly shifted, at least on a short-term basis, to the downside. So I like that we have a pretty significant top in place and that we're working some sort of larger move down. At this point, it is just unknown what the context and the degree of this decline will be. But all we can do is observe it on the shorter-term time frames, and then once there's more pattern development, make some better judgments on the larger pattern that's in play. So far, either scenario here, the overall bullish count here, or this much more bearish count here, are both almost equally viable at this point. Although I am just leaning towards the overall bearish count, for some other reasons, but that doesn't really matter. Whatever happens, happens. Doesn't matter what I think will or should happen, but try and stay as objective here as possible and just follow the price. Let it do the talking. Okay, so some more interesting things to point out here. So after we did get that nice daily sell signal, that bearish engulfing on Monday, nice follow through. So a bearish engulfing candlestick implies the next 3 to 5 price bars will trend in that direction. So far we've got 1, 2, 3, 4 price bars that have trended in that downward direction. So that's already a nice follow through on that signal. You can see we're now well below the daily T-line. The 3 T-lines cross below the T-line and just rolling over nicely on all these moving averages. And ideally, just as in this uptrend, when we pulled back, we only pulled back basically to the T-line on a closing basis. In this new downtrend that we're likely in, bounces are likely to find resistance, at least on a closing basis, on the T-line, just like they did during our decline here. You can see these bounce attempts basically went up and just nicked the T-line more or less. All right, we actually are already back below the 200-day moving average, so that didn't really provide much of a support level here on the way down, as some may have thought it would. And next kind of moving average of significance that may come into play is this 50-day, so there might be a little bit of a bounce attempt there, but we'll see. Not quite into the oversold condition here on the daily oscillator, so I suspect we come down here a little further, put our wave 1 or A in, get oversold here, come up for our 2 or B, and then that'll be the next major entry opportunity for shorting. So for me, I am still short the futures. I've been riding that down this week. I carried a smaller position over the weekend here, but still short a few contracts. So that's been working well. Now on the weekly candlestick chart, I think this is significant. We have a very strong weekly bearish engulfing candlestick sell signal. And so that complements the daily we had to start the week on Monday. Now we have a nice weekly bearish engulfing. And that was after that reversal candlestick last week. So we had this, you could call it a hanging man candlestick. Or a doji really, but a bit of a hanging man. Either way, reversal candlestick in the overbought condition, confirmed this week with a nice bearish engulfing candlestick. Again, this is on the weekly time frame, and this engulfs the 2 prior weeks' real bodies. So the more prior candles you engulf, the more significant of a signal. So that's pretty significant on the weekly basis here. And if you look over here, so this was a weekly candlestick sell signal right after the all-time high there. That led to a significant decline into October. And then our next candlestick sell signal came here, and that was in December. And that obviously had a nice decline towards the end of December. So this is the first candlestick weekly sell signal we've had since back then in December. And let's see if it has, similar powerful follow-through that we had on those other signals. I suspect it will. And you can see we're just starting to come off, curl down from that overbought condition here on the weekly oscillator. So things are starting to shape up to be a little more bearish. Not below the weekly T-line yet, but I suspect that's coming soon. Anyway, that's the weekly. Continue to monitor things more closely on the daily. And okay, so we will go to Dow Jones Industrial Average. And on the Dow, very much the same picture. Again, the Dow didn't confirm the new high on the NASDAQ and SPX on Monday. It failed to make a new high, and then it did its own bearish engulfing candlestick, and nice follow through on that as well. We're not quite even back down at that 200-day moving average on the Dow, so certainly these markets are in a little bit different position as far as their long-term moving averages, but it shouldn't make much difference from a directional perspective. They should all trend in tandem with one another. Starting to get into the oversold condition on the Dow. So again, a bounce at this point wouldn't be surprising. But it'd be nice to see that daily T-line serve up as resistance on any bounce attempts. Now on the weekly oscillator, you can see we're overbought here and coming down, curling off that overbought condition here on the Dow on the weekly. And let's see, is this a... I don't think this is a weekly bearish engulfing on the Dow. We didn't open quite high enough. So we had that nice reversal weekly doji last week on the Dow, and then let's see, well, we closed, sorry, we opened at 26,126.15 here, and we opened at 26,122.19. So yeah, we didn't open quite high enough for this to be an engulfing candlestick, but a red week nonetheless after a doji reversal, and I expect it to follow the trend of the S&P and also the NASDAQ. All right, so that's the Dow. Not really anything standing out there different from the other indexes. And we'll look at the NASDAQ composite. So the NASDAQ composite, that had a nice bearish engulfing on Monday, and then we had nice follow through, and very much like the S&P, below the T-line, closed well below the T-line, 3 T-line cross below the T-line. These moving averages are all starting to roll over here, the 20-day and everything, so definitely looking like a new trend is kicked off. Stochastics coming down sharply from the overbought condition, not yet oversold. Again, this kind of stands out. We may get kind of a bounce around this 50-day simple moving average, which is also around this former support area we had back here on the NASDAQ. That's around 72.25. So that might be an area of interest to look for this initial impulse wave down to perhaps end and bounce from. But we'll have to see how it plays out next week. On the weekly candlestick image here, and let me just get rid of this clutter. So the NASDAQ didn't really have much of a signal last week. In fact, it looked like a bullish hammer at the end of last week, but that's been completely canceled out here. So now we have a nice bearish engulfing weekly candlestick on the NASDAQ composite, engulfing 2 prior weeks real bodies, and the weekly oscillator just starting to roll over off that overbought condition. So that's a nice weekly sell signal. And again, the NASDAQ here had a weekly bearish engulfing that had significant follow through, and then here again, significant follow through. So these weekly bearish engulfings have been quite potent on the indices. And let's see if this one can carry that on. Okay, now we'll go to the VIX. The VIX has finally come back from its depressed conditions there. Alright, so you can see the VIX has at least started shifting the immediate trend back to the upward direction. So we broke above this initial resistance level I was looking at here on the VIX, and that was 16.17. So we got spiked above there, of course closed down, but now we've been trending up, and intraday today we got 1833, so that's a nice little high on the VIX. Rejected intraday and closed at just over 16.05, but the lower high, lower low pattern of the VIX has been broken, and now we're starting to do a little higher high, higher low uptrend pattern. So VIX starting to come up, indices starting to come down, certainly what you would expect to see. And I don't usually look at it too often, but let's look at the weekly chart of the VIX, see if there's anything interesting here. So on the weekly chart of the VIX, all right, interesting. So you had this gravestone doji last week, and that was kind of a signal of a trend exhaustion. So in this case, downtrend exhaustion. Gravestone doji, Now this week you've had confirmation by exploding upwards quite nicely, and you can see we broke multiple prior weeks of resistance. So let's see, 1, 2, 3, 4, 4 prior weeks of resistance we broke intra-week. So VIX definitely starting to show some life here on the weekly time frame. And you can see we got very oversold and stayed there in this weekly oscillator, but now starting to come off of that, starting to curl up. So that's worth watching here. And back up above the 200-week simple moving average on VIX. Also worth noting. And we're just kind of hovering around the 200-day simple moving average on VIX. So we'll have to see how this develops. But obviously the expected direction would be up in VIX if we're expecting down on the overall market. Okay, now on the VIX, VVIX tool, that actually proved to be a good signal finally. And okay, let me just highlight that there. So this is where we got our signal. Let me just turn it that ugly yellow color. Alright. So we had that lower low in VIX. We had a higher low in VVIX. So we had the VIX-VVIX divergence. Step 1 of the signal. Then we got above the red moving average on VVIX. And then confirmed shortly after on SPX, getting below the blue moving average. We came down, retested the red moving average on VVIX, but started bouncing off of that and trending up again. And on SPX, retested the blue moving average, now having it serve as resistance on SPX, and then trending down nicely. So we're now on a legitimate sell signal using this tool. So that's worth pointing out. And these signals often are quite powerful. The last signal, which was a buy signal, led to 400+ point rally, which was fairly surprising, but nonetheless just shows what these signals can produce. So certainly worth noting that we have a legitimate sell signal in place here on this. Now, what will I do before I end the video here? Yeah, I'll just mention. So back to this chart here. So what will we really look for to determine what's the right wave interpretation, or what we should be leaning on more? So right now, again, just to highlight, we could be doing 1 down and then 2 up and then have a strong move down, or we could be doing A down, B up, and just have a weaker move down in C. And until we have more data, this is not going to look much different. Expecting a 5-way move down and then a 3-way move up, it could be either A or C, or sorry, A or 1, or 2 or B, and they really won't look a whole lot different. The really, the tell, in my opinion, will be once we have our initial 5 down, 3 up, what does the next 5 down look like? So if it's a C wave, it should be shallower in slope than the A wave. It shouldn't go very much farther than the equality relationship between A and C, and then we should find some nice support in a typical Fibonacci retracement zone. And you should start seeing divergences and other things in the market, like the advanced decline stuff, and market breadth and all these things should start to show some strength and bullish divergences if we are just doing a corrective retracement, or if we're coming down hard and volatility is increasing and negative breadth is increasing, and we're not having internal strength, anything like that. If everything's really starting to break down, that'll be, and certainly once we start getting lower and this third leg down starts getting sharper in slope and longer in length than that first leg down, now we can start being more confident that, okay, we're in a more bearish impulsive scenario to the downside. But until we have that kind of data to work with, it's really unknowable which scenario is more likely. So at this point, they're equally likely until we got more information. All right, that should be good for now. Serial Trader signing off.